Are you dreaming of homeownership but worried about the hurdles? Dive into our guide on FHA mortgages and discover how they can make your dream a reality. So, what is an FHA mortgage? An FHA, Federal Housing Administrative Mortgage, is a loan inspired by the FHA, a part of the U.S. Department of Housing and Urban Development, also known as HUD. This insurance allows lenders to offer more favorable terms to borrowers, making homeownership more accessible. What are the benefits of FHA mortgages? Number one would be lowering down payment. One of the most significant advantages is the low down payment requirement. Borrowers can put down as little as 3.5% of the purchase price, making it easier for first-time home buyers or those with limited savings. Second would be the flexible credit requirements. FHA loans are more forgiving of past credit issues. While conventional loans typically require higher credit scores, FHA loans may be available to borrowers with lower scores. What about the interest rates? FHA loans often come with lower interest rates than conventional mortgages, which can be a result in significant savings over the life of the loan. They're also assumable. FHA loans can be assumed by a qualified buyer if you decide to sell your home, which can be a selling point in a rising interest rate market. What are the eligibility and requirements? The first would be credit score. While FHA guidelines allow for lower credit scores, most lenders require a minimum credit score of 580 to qualify for the 3.5% down payment. Those with scores between 500 and 579 may still be eligible with a 10% down payment. Next would be your debt to income ratio. Generally, a maximum DTI ratio of 43% is preferred, although some lenders may accept higher ratios with compensating factors. What about property standards? The property must meet certain safety, security, and soundness standards set by the FHA. This means the home should be in a livable condition at the time of purchase. So you may ask, what are the costs and fees? Mortgage insurance premiums, known as MIP. FHA loans require both an upfront MIP, which can be rolled into the loan amount, and an annual MIP paid monthly. This insurance protects the lender if the borrower defaults on the loan. What about closing costs? FHA borrowers may have to pay various closing costs, which can sometimes be covered by the seller or included in the loan. How to apply for an FHA mortgage? Find a lender. Work with a lender approved by the FHA. They can guide you through the application process and help you understand your options. Then you can get pre-approved. Get pre-approved with an FHA loan to understand how much you can afford and make you offer more attractive to sellers. Loan processing underwriting. Once you've found a home, your lender will handle the appraisal, underwriting, and closing process. So, in conclusion, FHA loans offer a path to ownership for those who might struggle to meet the requirements of conventional loans. With the lower down payments and flexible credit criteria, they provide an accessible option for many prospective homebuyers. By leveraging the benefits of an FHA mortgage, you can achieve your homeownership goals with less financial strain. If you have any questions, don't hesitate to give me a call.